Hello everyone, welcome to Just Invest Today. And today we're going to be talking about Amazon, guys. We're doing a stock analysis on Amazon. We're going to find out, is this a good business to buy? Guys, we have Jeff Bezos, the founder, launching to like Mars or wherever he's going in space. Like, you know this business is doing well when your founder can just lay back and just go to space like that. So guys, we're gonna get into this video, talk about Amazon. Is this a buy? Is this a wait? Is this a sell? What should you do with Amazon? So guys, we know what Amazon is. If you're living under a rock, you know it's one of the best e-commerce business around. Everything is going good for it. We know how solid the company is, how strong the moat is, and everything's going on with it. So let's get into this first. Let's get into a few articles just to see what should we do with Amazon. Because a lot of people have been asking me, should I buy Amazon? Should I wait? Should you sell it? What should we do? So let's get into it right now. So the first article, Ferrari agrees to Amazon's AWS. And guys, we know Amazon is the biggest cloud business right now. I think it's like 32% of the cloud business right now. So Amazon is killing it with the cloud, and you know cloud is just getting bigger and bigger and bigger, and people need it even more in today's market when e-commerce and all the media is just, it's booming. Everything's booming in that section. So you can see where this is going, and it's growing around 33%. So you can just see right here, Ferrari is getting with AWS right now, right? Amazon's cloud service. So you can just see how Amazon, it has all these small businesses inside of its actually main retail business, guys. So that's like a key factor. And look at this. Amazon's cashless technology comes to a full-size grocery store called Amazon Fresh. So they're releasing grocery stores and without any like cashiers. So can you just imagine the savings is gonna come with that if they find this as a successful business? And this is what Amazon does. This is what's amazing about Amazon is they have all these small businesses inside of the main retail e-commerce business. So that's a key aspect because you know they are working on so many different projects. Because think about this: if there's cashless, if this cashless cashiers, how much cost savings is that going to be? And we know Amazon is amazing at getting all that cost savings and giving it to the customer. So all that cash savings from the grocery store is going to be cheaper prices for a lot of people, which is going to be battling all those grocery stores like Walmart and wherever you live, whatever you use, like Freshco. I live in Canada, so yeah. So you can just see how this is going to be crazy for like just getting into that field and maybe even lowering in prices, getting like a huge competitive moat with fresh produce. So you can just see how what Amazon is doing, all the moves they're making. Look at the next move. Amazon buys MGM. Like, look at that, $8.4 billion. So like guys, you know what Amazon does? They have the Prime Video, they have the AWS cloud services, then they have the main retail business, and what else do they have? They have grocery stores. Like, they're just killing it right now. So this is just gonna bring more eyes. Oh yeah, this right here is just gonna bring so much more eyes to Amazon right now. Like, they're gonna get more, if they actually get good deals with this, they're gonna get more subscribers to just their Amazon Prime, which they can actually generate more ad revenue. And that's what we're gonna talk about in the next section. But look at this. They bought MGM, 8.4 billion. And guess what, like the movies they have? They have James Bond, they have the Rocky franchise, they have 12 Angry Men, Handmaids, they have Vikings, they have Shark Tank. Like, that's not just a small feat of like good movies and good series. Like, what can they do with all that good content? And you know Amazon's making their own original content too, so they're just getting more people involved in the Amazon ecosystem. And they can just see how that's such a strong competitive advantage for Amazon right now. And here is another key kicker, guys. People are not really seeing this. Amazon's ad business. Amazon's ad business is generating nearly $7 billion a quarter, and growth is accelerating at 77% or a little bit less. Guys, this is huge, and Think about how big the ad business is. Look at what Google and Facebook are doing just from the ad business. So Amazon is taking a lot of space in that ad business right now, and that's growing really fast because the people are seeing how effective Amazon ad business is. Because when you actually go to their site, you don't even know the ads are there. It's just almost like invisible to you. But they put the products in front of, like, when people add and advertise on Amazon's main retail site, they put it in front, so you can just see how the retail is coming along, and then with the retail they can get a huge market of the ad business. And guys, and when you think about it too, Amazon is only like what 14% of the retail sales market. So they still have a huge runway for growth just from the retail e-commerce side of the business. And that's going to generate more money for all the rest of the businesses, right? And they're projecting that to go, and the pandemic happened, and they're projecting that to go to 20-25% this year. And that's steadily going to be increasing as e-commerce becomes more efficient, and it gets into more minds of people. So guys, you can just see how Amazon is just so entrenched. It's in the share of everyone's mind. Like Warren Buffett says, how when he got Disney, it's on the top of people's mind, Disney. And when you think about Disney, you know what you think about. What Coca-Cola, share of mind is so key when it comes to companies like this. So I feel like, what did I do? I found this actual pretty good dirty evaluation on Amazon. Some quick dirty evaluation on Amazon, right? And it was like a little, I think it was on Seeking Alpha or something like that. It was like a comment. And look what this guy said, which is really interesting. So okay, so we know Amazon has AWS, it has streaming, it has retail, logistics, it has healthcare, speakers, and Prime. Guys, can you imagine this? And this is all in one company, guys. It's just crazy to me. So look at this quick dirty analysis on Amazon. Currently at a $1.7 trillion market cap. So today AWS alone is $500 billion, guys, and it's growing super fast. So this guy estimates growth in 2 years, $1 trillion. So just the AWS alone can be $1 trillion in 2 years. The advertising business is growing to 500 to 600 billion in a few years because, guys, it's generating $7 billion a quarter, guys, and that's growing at around 60-70%. I'm not sure if they can keep that up, but people are starting to spend more on advertisements since everything is opening up. People are going to start spending more on ads. So you can see this business easily growing to 500 billion, and that's only going to be 10% of the ad market. So that's not even going to be a lot if you think about it. Then core retail grows to 1 trillion with continued Prime adoption, e-commerce megatrends. Guys, that's what I'm saying. E-commerce is not even a huge penetration. It's Amazon leading, and then it's Walmart, and I think then it's eBay or something like that, or Target. So you can still see there's a huge amount of growth with Prime, and that's kind of mind blowing because I feel like Prime and Amazon's really established crazy in the market. But guys, when you think overall of the retail sales in America and other places, it hasn't even met deep penetration yet. Its international business is still growing. So just that alone, guys, those three, and it's just those three. We're not talking about healthcare, logistics too. Once they start having enough people to just deliver everything and deliver all their Amazon stuff, what's them stopping from actually delivering other products that has nothing to do with Amazon? Think about UPS, FedEx, and all those companies. What if it starts getting into that market? Look how big it can still grow. So people are not even thinking about that too. Once all the logistics is handled, and once they're able to deliver all their stuff and not use other companies like USPS or whatever, and they can just deliver it themselves, wow, that's going to be huge. Right? So you can just see how this can be a $3.5 trillion company easily in the next few years, which is all those businesses. So, but that's assuming all of this works out, guys. So that's always a caveat. How likely is this situation going to work out? I feel like it's pretty likely. I don't see Amazon stopping, or what can stop Amazon right now, because it's just such a deep, ingrained company right now. The only thing, I think the biggest risk, guys, we have right now for Amazon, when we really think about it, it's the government. The government splitting it up. And that's the only huge risk I see, because you see everywhere in the media they're talking about splitting up Amazon. So that's the huge risk you're taking if you're gonna actually invest in Amazon. They're splitting up the company, but is that gonna be like, how is that gonna play out? Like, because if they split AWS, the stock price might go up. People would love to buy AWS, Amazon Web Services, just by itself. It's gonna be a $500 billion company with crazy margins and crazy profit, and it's growing because people are spending so much money in that sector, the cloud business. So you can just see how there's so much growth ahead of it. So even if that's a possibility, it's a huge possibility, it's still looking good for Amazon. And that's how I see it. So we're going to cook a quick, dirty evaluation right now. If we have a 20% growth rate for this company and we sell it for a 40 PE, we can buy it at a fair value today at $3,100. And I think 20% growth is pretty sufficient, guys. Margin of safety at about 1,500. But guys, do you need a margin of safety for Amazon? Do you see? Because when we get a margin of safety business, we're expecting the worst outcome. Like, what can happen? You always want to buy with a margin of safety, but with Amazon, like, some companies, it's good to. Warren Buffett, Charlie Munger always said, a fair price for a wonderful business that's amazing, guys. So $3,100, I think it's a fair price for Amazon. If you're expecting a 20% growth rate, guys, we know when we're doing DCF models, guys, don't rely on them. They're just they're insufficient, guys. Everyone expects the DCF, like, it's so calculated. Like, you get 20% growth, 3 years, 4 years, and then it drops off, kind of. Like, why does all DCF models drops off? Why can't it be 20% growth, and then next year be 10% growth, next year be 15% growth? Like, no one knows the growth rates, guys. So think about it like that. This is just a quick analysis. We don't use this to be like anything like reasonable. We're just using it as a quick estimate of what we think about the company. And when we look at this model, we quickly be like, okay, we see it at this price as a fair value. Do we know for a fact that this company is going to be bigger in 5 years? If you can answer that question, is this company going to be bigger in 5 years? Just buy the company at a fair value, or maybe a little bit of a margin of safety. That's the only thing. If we can expect this company to be bigger in 5 years, we don't have to be so like crazy about the evaluation and get the models right, because the models are never going to be right. They're just not. Everyone has this precise science of evaluating the company, and it's going to be wrong, guys. It's going to be wrong. So that's why you get a margin of safety. But even if you can just think, like, is this company going to be, am I sure, positive, confident this company's going to be bigger in 5 years? Then you can invest in that company. So that's what I have to say about that. A little rant. But let's go on to the next slide. So we see that Amazon currently is selling at $3,400. So it's above our fair value estimates, guys. So right now, I probably would wait until it gets to $3,100 if I was gonna buy it. Look, 6 months ago, it was at 3,000, 2,900, 2021 March. Look at that. It was there, guys. Think about it. 3,100 May 2021. So it was right there, guys. But 3,400, it's a little bit over fair value. But even if you pay over that, it's still gonna be amazing business. It's still gonna grow in my mind. But don't take what I'm saying and just like take it and buy the company. This is just my assumption. So I'm not a financial advisor, so guys, you gotta do your own research and why you probably think Amazon can grow, or why you think it's gonna be falling down. The growth rates won't be there. So if you're assuming like a 15% growth rate, like, look at that. If you're assuming a lower growth rate, fair value might be $1,500 for it. It all depends on what you are assuming for Amazon right now, guys. So tell me what you guys think about Amazon. Is it a good buy for you guys? But for me, I'm probably going to be waiting on it. I'm not going to be buying it. think about it like this. I feel like Charlie Munger always says, fish where the fish are. I feel like right now, Baba is, all the Chinese companies are way cheaper, but we understand there's, people think there's more risk, so people are avoiding that. But fish where the fish are, guys, right now. Baba is is on sale like crazy, in my opinion. Do your own research. But that's just my opinion. I think Baba's way more undervalued, way more, probably even more growth ahead of it. But that's just what I think, guys. I still think like, yo, Amazon is an amazing stock to buy. Has a lot of room to grow. 3,100 would probably be my entry point if I was buying Amazon. So take it or leave it. Guys, if you like this video, like it, subscribe to my channel. I get back to you in the next video. Peace.